China is about to drop a $420 billion nuke on the market. And as the entire altcoin market makes a massive recovery over the past week, with Bitcoin sitting over $64,000, Ethereum about to breach 2,800, Solana over 161, XRP over 62 cents, Toncoin over $6.80, and virtually all of the top large cap projects up anywhere between 15, 20%, 7%, 25%, 41%, or more the past 7 days. Everyone in the crypto space wants to know, what is September going to look like when we discuss Bitcoin's monthly returns? What happens if the Fed cuts interest rates in September? And every time we see an inverted yield curve, what does this paint a picture for of what's coming in the stock market and the crypto market? So in this video, we're going to dive more into the effective federal funds rate, the expectations for the meeting in September, the yield curve inversion, what has happened every single time in the past, bringing up the last 4 crashes that have taken place when the yield curve flipped into the positive, also the correlation between the S&P 500, Bitcoin, and the rest of the crypto market. So if there were to be a crash in the stock market, not necessarily if there were, just when there's a crash, how that will affect crypto. We're also comparing the total altcoin market to the past and what happened the last time that we saw a death cross, where we are right now in the macroeconomic climate with the Fed balance sheet compared to the past few crashes, what's happening with Bitcoin's open interest, what's taking place over in Russia with Bitcoin mining, money printing over in the European Union, Japan, India, China, and here in the United States, and then what has happened every single market cycle when we have been in this exact stage right now in the past, specifically for the XRP to the US dollar price chart, and what to do to make the most amount of money possible this entire bull run. So if you guys are feeling bullish this weekend, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. Hey bull runners, welcome back to the channel. So before we dive into this video, I want you to note that all of the opinions expressed in this video are purely for informational, educational purposes only, and they do not constitute financial, legal, or investment advice. All investments in the crypto market carries massive risks and potential losses, so you should always do your own research, consult with a licensed financial advisor. We're not licensed financial advisors, and relying on our content for decisions is purely at your own risk. And by watching, you agree that we're not responsible for any losses or damages, and we don't guarantee any specific results or outcomes. And as you know, some of the links in the description below this video, they may be affiliate links and we may earn a commission, which also helps support value-based videos like this. So we appreciate you guys for supporting the channel. And we also hold positions in some of the cryptocurrencies discussed in our videos because we only talk about what we believe in. However, this should not be interpreted as a recommendation for you to do the same. So with that being said, let's get right into the video.
Half of all the corporate money being pumped into this year's election is coming from the crypto industry, according to a new report from the nonprofit watchdog group Public Citizen. Now, the sector, which has been under high scrutiny by the Biden administration, is outspending big oil and banks this cycle, with Koch Industries in a distant second place in terms of corporate contributions. Heavyweights like Coinbase, Ripple, and VC firm Andreessen Horowitz, which has a sizable crypto book, have collectively given more than $146 million with the goal of trying to get candidates who are friendly to the industry into office. Now, most of that corporate money being raised is going to the popular and bipartisan pro-crypto super PAC called Fairshake, which is one of the top spending PACs this year. I spoke to their team last night to get the latest numbers on the 4 largest donors to Fairshake and its associated PACs. Coinbase has contributed $49 million. A16Z and Ripple have both given $47 million each, and Jump Crypto put in $15 million. Now, as for where all that money is going, a filing with the Federal Election Commission this week showed that in July, Fairshake dispersed almost $75 million and still has nearly $120 million left to deploy, with 73 days to go until the November election. The super PAC has pledged $25 million from that pool of cash to 18 House candidates in the general election to be split among 9 Democrats and 9 Republicans. It's committed another $18 million to 3 Senate races, Joe.
So as the crypto donations continuously rise leading into election, basically politicians are going to be bought out. And that's a good thing for crypto because there's going to be more favorable legislation passed for crypto that's coming. And so over the past week, we've seen the market's recovery. Over the past month, there's a mix of projects that are up more, some projects that are down still, because there was an absolute bloodbath that happened over the past month. So I want to prepare you guys for what's coming next over the next few months leading into elections, specifically with what's going to happen in September with the expectations for the FOMC meeting happening in the next 25 days. But first, I want to give you an update for what I'm doing to earn an extra 1,000 to 2,000 XRP per day with the #1 liquidity pool in the world on the XRP ledger and the first play to earn XRP game. So this project I talked about in the middle of July, it was sitting at about $50. Right now it's at about $100 and a very healthy uptrend the past 30 days. Now, one of the main reasons why this project is doing well is because of the liquidity pool that's paired to XRP on the XRP ledger through their automated market maker, which allows you to provide liquidity to benefit from the pool, and you receive LP tokens in return. And by holding those LP tokens, you can earn trading fees and other benefits by playing the first play to earn game on the XRP ledger. Now, the game's really simple. I'll leave a link in the description below for you guys to check this out. You simply collect digital game pieces that will earn you crypto rewards each and every single day. For example, these pieces of land right here earn me crypto every single day. And as you can see right here, over the past few days, I've earned 26 crypto. Now, crypto is the in-game currency. Right now, it's worth about $100 per token. So if you just take 26, multiply that by 100, that's about 2,600 worth of crypto. Right here, I have about 228. I simply withdraw my crypto each and every single day. I go to the liquidity pool, which I'll leave the tutorial for in the description below. I simply add about 8.58 crypto per day. Right now it says I'll receive 53,000 liquidity pool tokens. I just click add liquidity. It pulls it up in my XRP wallet, and I just simply slide to accept. And then it's gonna say transaction signed and dispatched, and then success. I receive my LP tokens, and as you can see right here, about 16.2 million LP tokens. I can remove liquidity at any moment that I want, so it's not locked up for any period of time. And I can either remove my LP tokens as crypto, the in-game currency, or as XRP. So if I want to redeem my LP tokens for XRP, that's roughly 413,000 XRP. And you can see right here, it says I'll redeem about 16.2 million LP tokens. So all I do every single day, it literally takes less than 10 minutes per day, is I play this game, I earn crypto rewards from my digital game pieces, I withdraw my crypto from the in-game bank, I then take that crypto, I add it to the liquidity pool on the XRP ledger, and then I just simply stack my crypto rewards, and I can remove liquidity at any moment that I want. So if you guys want to check this out, you can go to bullrunners.com. The link will be below. You'll discover how to earn more crypto in less than 10 minutes per day with the #1 play to earn XRP game. You just put in your best email address. You'll be instantly subscribed to our daily video newsletter. Watch the 8-minute video on the other side. You can literally get started right now while you watch this video. We'll show you how to get your XRP wallet, how to get your game pieces, how to get crypto and play the game, and then how to withdraw crypto to benefit from the liquidity pool so you can stack your crypto rewards every single day. Because leading into Q4 of this year, it's going to be absolutely electric what's happening in the markets. If we look at October, massively bullish. In November, there's been periods that have been massively bullish from 2013 until 2017. Obviously, 2022 was bearish because we were in a bear market. Same with 2018, we were in a bear market. So we're in a bull market. The future for crypto is looking bright. However, I do have a warning for you guys, and it's important that we talk about this because every instance of an inverted yield curve coupled with a prolonged sideways trend in the Fed funds rate, the economy has been headed into an economic recession the past few times that this has taken place. When the Fed starts cutting rates and the yield curve flips positive, we're on the brink of a recession and a major market crash. So this market currently has an 85% correlation to the summer of 2007. So a lot of people are saying that this time is no different because when we look at the effective federal funds rate, it's been paused since September. If we zoom in right here, after August, then September, then October, we've been paused at 5.33. And several times throughout the year, there's a thing called the FOMC meeting where they discuss interest rates, and there's the Fed watch tool that gives expectations for rates. So 76% are expecting a rate cut of anywhere between 25 to 50 basis points. So because Jerome Powell is dovish, that's going to be the most likely scenario. And what we're going to see happen here is we're going to see the effective federal funds rate dip down anywhere between 25 and 50 basis points, unless he comes out and he just holds the rate steady, which there's a low likelihood of that. There's not no likelihood, there's just a very low likelihood because almost everyone's expecting either a 25 to 50 or a much larger rate cut. And so what does this mean? Why does this matter for crypto, and how is this correlated between the yield curve inversion, the crypto market, and the stock market? Well, let's talk about it. So the first thing that we need to discuss is the yield curve, which is the 10-year Treasury constant maturity minus the 2-year Treasury constant maturity. And to simplify this for you guys, the yield curve is a graphical representation of the interest rates on bonds of different maturities, typically government bonds at a specific point in time. A normal yield curve slopes upwards, indicating that longer term bonds have higher yields than shorter term bonds, whereas a yield curve inversion occurs when shorter term yields are higher than longer term yields, which can signal expectations of economic slowdowns or recessions coming. So you can see this horizontal black line right in the middle, and then this blue line that fluctuates above or below it, and that gives us an inversion. So for example, right here, if I were to zoom in for you guys, the yield curve bottomed out right here on July 3rd of 2023 at negative 1.08. And we've been seeing this blue line right here trend back up. And right now we're at negative 0.09, getting close back to zero. Now, when central banks, specifically the Federal Reserve, cuts interest rates, they generally reduce the short-term interest rate, which are directly influenced by their policy decisions. So interest rate cuts directly lower the short-term yields because these rates are closely tied to the policy rate set by the central bank. Now, if the yield curve was inverted prior to a rate cut, which is exactly what we're seeing right now, because since after August and September 2023, the effective federal funds rate has just been at 5.33% and the yield curve has been inverted. Well, according to artificial intelligence, if the yield curve was inverted prior to the rate cut, that checks out, then lowering short-term rates can help to flatten the curve by narrowing the gap between short-term and long-term yields. However, there's a caveat here. If the long-term rates don't fall as much or remain stable, the yield curve could stay inverted. And we've seen something like this happen in the past. Back from 1980, we can see that the yield curve was all the way down at negative 1.70. It came all the way up here, bobbled around sideways. It tried to recover back above zero. It couldn't do that. Then it bounced all the way back down, went into the positive. It even went upwards of almost 1, and it came back down to a yield curve inversion as well. So understanding what's going to happen next, we need to look at multiple different viewpoints from everything. And as always, I provide these videos so you guys can do your own research and come to your own conclusion here. So we're going to look at a lot in this video. It's going to be a pretty lengthy video. If you guys are driving in your car, just keep listening because you're going to have an aha moment, because I approach these markets in a way that 99% of people don't, because they just want to pitch a narrative to you that we're just going up and we're going to the moon, which I get it. It's exciting to think that way, but we need to have a grounded reality approach of the most likely scenario to happen next so you can preserve your capital, protect your capital, and scale your wealth. So in a little bit, we're going to pair up the 10-year yield compared to the S&P 500 index, and then also we're going to pair up what happened the last few times the yield curve went from being inverted to the positive compared to where we are today for the S&P. And then we're going to compare the correlation between Bitcoin and the rest of the altcoin market. So you guys are going to absolutely love this video, because the reason why we need to look at long-term yields is they often reflect expectations about future economic growth and inflation. So if the rate cut is seen as a response to worsening economic conditions, then long-term yields might decrease even further, which can sustain or even deepen the inversion. Whereas if the rate cuts are seen as a proactive measure to stimulate the economy, long-term yields might even stabilize, or they could even rise, potentially normalizing the yield curve, moving it back towards an upward slope. So a major signal of economic concerns is if interest rate cuts during a yield curve inversion often signal to the market that the central bank is concerned about an economic slowdown. This can lead to further decline in long-term yields as investors seek safer long-term investments, maintaining or deepening the inversion. So in summary, before we get into the charts, interest rate cuts tend to reduce short-term yields, which can flatten the yield curve or reduce the degree of inversion, bringing the yield curve back into the positive. So while rates have been paused, we've seen the yield curve bounce back up to 0.09 from a negative 1.06. And the impact on long-term yields depends on the market perceptions of the rate cut's effectiveness in stimulating economic growth. So if longer-term yields drop in response to concerns about future economic conditions, the inversion might persist or even deepen. However, if long-term yields rise due to improved economic outlook, the curve may normalize. Now, if we look at what's happened with the 10-year yield since March with the COVID crash, well, the S&P 500 recovered out of there, and we've been trending up. Sure, there was some volatility in 2022 with the stock market crash, whereas the yield curve drastically spiked all the way up. We were forming higher highs on the yield. Now, a big area of concern was this bearish divergence where we were seeing lower highs on the relative strength index on the weekly time frame. And so as you can see here, the RSI would come up, get rejected, come up, get rejected, while we were forming a higher high. Simultaneously, we were forming higher lows, higher highs. So we were technically in an uptrend for the 10-year yield. And just recently, at the end of July, we broke this ascending support for the 10-year yield, and it's sitting about 3.8% right now. I even talked about this several months ago with the 2-year yield, where we were forming higher highs on the yield and higher lows. in this rising wedge. And also we were forming lower highs on the relative strength index, which signaled that a reversal was coming. And sure enough, that's exactly what we saw happen. We saw a break to the downside of this ascending support. And then we're just now breaking this much more macro ascending support on the weekly, while the RSI is all the way down here at 32 into oversold territory. So this is very interesting because if we were to measure when the bottom of the yield curve came in, this was July 3rd of 2023, we were at negative 1.08. And if we were to compare that to the last time that we were in a yield curve inversion when the bottom was in, this was November 15th of 2006. And so if we were to measure from November 15th of 2006 to when the top of the market came in, that was 329 days after the yield curve bottomed out and started recovering back into positive territory, where longer term bonds had higher yields than shorter term bonds, the yield curve goes back into the positive. So what we see happen is the 2-year yield curve drop faster than the 10-year yield curve. Now they can both drop, it's just that the 2 years dropping quicker, the 10-year is now higher than the 2-year, which puts the yield curve in a positive territory. So that creates the spread, and that's essentially when you take the 10-year yield maturity and then you subtract that from the 2-year, which then gives this number right here. So case in point, if we measure from when it bottomed out in the past to how long it took for the market to top after that while it was going back towards positive territory, 329 days. How far are we into this yield curve? Well, it bottomed out in July of 2023 and it's been going back towards positive territory. It's been 418 days. And so this is what's leading a lot of people to compare what's going on in the stock market right now back to 2007, saying it's not different this time. The S&P 500 is repeating the pattern before it dropped 66%. Where you can see this recovery right now is exactly what happened right here before the main crash when we formed a new all-time high, and then we started the downtrend after that, essentially over a 2-year period. So the real question is, when will the crash start? How much higher do we have to go to the upside? And what do you need to do to prepare if it is just like 2008, 2009? Because from 2006 to 2010, you guys can see that the yield curve went drastically into positive territory where the 10-year was way larger than the 2-year over that period. And this all happened right around this phase right here when the Fed was drastically cutting rates. That's when the yield curve went back into positive territory. And after October 11th of 2007, that's when the market crash really started to take off, and it was absolutely disgusting after that. The time before then was the 2000 dot-com bubble boom. You guys can see the effective federal funds rate right here in blue. You can also see the yield curve inversion when the Fed started rapidly cutting rates. That's when the 10-year yield rose above the 2-year yield, and we saw the yield curve inversion go back into positive territory just as quickly as they were cutting rates. So you can see it's inverse, right? If the Fed drops rates rapidly, the yield curve goes back up rapidly, which historically has caused the stock market to come down rapidly. If we look right here back in April of the year 2000, and we zoom in right here on the yield curve inversion on where we were, April 7th of 2000, we were at negative 0.52. The yield curve bottomed out, then it started to work its way on out of here. It looked like it tried to form a double bottom, but it was higher than the previous low. So we were in an uptrend for the yield curve. About 140 days after that, the market topped out by September 1st of 2000 and then started the bear market after that. So what the Federal Reserve is going to attempt to do with their interest rate cuts is make it a soft landing so we don't go through what we did back in 2008, 2009, and ultimately after the year 2000 to, if we look at when this bottomed out, it was about 2002. So we were in a 2-year bear market while the yield curve went from all the way down negative territory and it drastically started rising up above 1, 2, and eventually 3 by 2003. Almost, it was at 2.69. And as you can see right here on the left-hand side of the screen, the stock market dropped nearly 50% within that 2-year time frame. Now the time before then, if we were to measure all the way back to 1989, roughly around March 28th of 1989, we were at negative 0.45, the lowest on the yield curve at that time. We started to bounce on out of here, went into positive territory, came back down, bobbled around back into a yield curve inversion, then started to work our way on out of here. And ultimately by 1992, we were all the way above 2.6. So let's look at what happened in the stock market at that time. Well, when the yield curve bottomed out right here and started to go back into positive territory, the S&P 500 saw a massive rally, and it took about 477 days before it topped out. Then once it topped out from 1990 to October of 1990, for about 3 months, the stock market crashed. So this was a 20% crash, but it's very interesting because if we look at the yield curve by October 30th, 1990, it was at 0.91 in positive territory, and it kept going up from there. If we look at the stock market, after that 20% dip, the market just recovered massively out of that, formed new all-time highs, and just started ripping to the upside. Because you can see the yield curve topped out right here, roughly by July 17th of 1992. And by then, the S&P was all the way up at 423, recovering from about 295 down here from August of 1990. So for that 2-year period, we saw a massive bull market rally, then some volatility, and ultimately it trended even higher than that, and it absolutely exploded after 1994. You can see on the left-hand side of the screen, it was just purely up from there. So in this scenario, it took a little bit longer before a crash, and the crash was actually much smaller. So it took 477 days, and the crash was only 20%. Now, if we go all the way back to 1980, this period was a lot more volatile for the yield curve inversion. As you guys can see, it bottomed out right here on like March 20th of 1980, went all the way up into the positive, crashed back down, bobbled around for a while, went back into the positive, crashed back down, then started to work its way on out of here. So if we were to measure the low point right here, March 20th of 1980, from that period, the stock market was at a low. It had seen a crash prior to that from February. It took about 251 days before it topped out. And then we saw the crash from 1980 until 1982. So for about a 2-year bear market, the S&P crashed roughly about 27%. So we've seen every single time that the yield curve has gone from inverted, bottoming out, to recovering. The best case scenario is a 20%, second best case 27%, third best case was like a 50%, and then the worst scenario was 2007 to 2009. But ultimately, every single time after that crash took place, we saw a massive parabolic recovery on out of there to the upside following that. And this was after the market had priced in the yield curve going back in the positive, because as you guys know, the stock market and the crypto market does not like uncertainty and what's going to happen next. Uncertainty creates volatility. And so right now, it's very clear that the yield curve is trending back in the positive, but people are uncertain on how rapid this recovery back into the positive territory is going to be, and whether it's going to be a 27% crash like what happened from 1980 to 1982, a 20% crash like what happened from 1990 to the same year in October, 477 days after the yield curve bottomed out, or if it's going to be like what happened in the year 2000, where the S&P crashed nearly 50% over the course of 2 years, or like what happened from 2007 to 2009, where the market crashed nearly 60% over the course of 2 years. So if we just trace up the most recent, which is 2007, it's mirroring that closely, where this recovery right now in the S&P is the march to a new all-time high, like what happened 329 days after the yield curve was inverted right here by about the 11th of October of 2007 to put in a new all-time high before the market crash really starts going into 2025, 2026. So if it's like 2007 to 2009, that could lead to one of the most disgusting crashes in history. And the concern here that everyone has is the fact that we're 418 days into this yield curve inversion when it bottomed out. Like, we're even longer than that in the actual inversion, whereas in 2006 to 2007, it took 329 days from the bottom of the yield curve to where the market started to crash. So it's very obvious that we're overdue. Now, how much longer do we have to make money in this markets, and when should you get out? Because crypto is very risky. It's even riskier than the stock market. If we look at the correlation right here, we can see Bitcoin compared to the S&P 500 index. And as you guys can see, if we measure back from the top of April of 2021 and we compare it next to the S&P at the bottom of the screen, you guys can see the bear market was almost identically correlated, where these recovery periods for the Bitcoin was a recovery period for the S&P, followed by a sell-off, recovery, bottom. When the markets bottomed out, it was very, very close. The S&P bottomed out all the way down here on the 10th of October of 2022, whereas Bitcoin bottomed out in November, so a little bit after that. And if we look at the S&P on the bottom of the screen, the S&P actually broke out and formed a new all-time high in January of 2024, whereas Bitcoin took until March of 2024. So Bitcoin is actually lagging behind the S&P 500, which is actually a good thing, because Bitcoin would be chasing the S&P 500 in this scenario to catch up, to break out into a new all-time high. So this is why I personally believe there's still more time for this crypto bull run, because of what I'm going to be sharing with you in the data towards the end of this video. So keep watching. But nonetheless, it's important to know that these markets are correlated. And so if we do see a deep crash in the stock market, unless there's the complete global financial reset, like a lot of riddlers are talking about, and that money just flows into crypto, then crypto wouldn't see a crash. But that's just based on a theory. That's not based on facts. We like to base these videos on facts so you can come to your own educated decision. Because so far, crypto has been really correlated to the stock market, especially the past bear market and this current bull run. So if we look at the crypto total market cap excluding Bitcoin, and we compare it to the past on where we are in the market cycle, the last time that we saw a death cross take place was after COVID happened and we were recovering on out of here. Now, there was a sell-off right when the death cross happened. Right here on the 9th of April of 2020, the markets dropped 14%. Similar to what we saw right here with this death cross, we saw a sell-off going into it of about 33%, so it was a much deeper correction. And shortly after that cross, back from April of 2020 until May of 2020, the market started to recover. We saw a golden cross where the 50 SMA crossed back above the 200 SMA, and we started recovering on out of there. So if we were to see something like that, where the 50 moving average starts to curve back around with this market recovery and crosses back above the 200, and we were to trace it up right here, it could look something like this, where obviously there'd be some massive volatility in September. Maybe we see some liquidation event when the crypto total market cap comes back up to retest this descending zone of resistance right here that it was rejected from all the way back in March of 2024, April, right here. It tried to pass the all-time high. It ultimately got rejected by June of 2024, got rejected again by July of 2024. So leading into September, I would personally expect something like this to happen, the market to recover within this zone right here, leading into the Fed meeting. Then by September 18th, I would expect there to be some form of correction and liquidation in the market to bring the crypto total market cap back down, somewhere within this zone right here, which would be roughly within the $900 billion to $930 billion range. And then we start working our way on out of here to go back to the all-time high. And we break this descending zone of resistance right here that we've been rejected from ever since the top of March of 2024. Kind of similar what happened from here on the left-hand side of the screen that you guys can see from April of 2020 until May of 2020 for that month, or even from June of 2020 until roughly July of 2020, we can see similarities here where we see a descending resistance, a descending support as well too. The price chops within a range like this for a period of time and then ultimately sees a massive green candle breakout followed by more chop, and then a massive green candle breakout followed by more chop further to the upside. And then it just gets bigger and bigger and bigger as more liquidity flows into the market. So what we're going through right now, in my opinion, is a compressed version from 2019 to 2020. If I draw it up to the chart where we are right now, is something like this, where the COVID capitulation event to shake everyone out of the market and bring crypto back down to 700 billion was very similar to what we saw happen on the left-hand side of the screen right here. In this recovery phase that we're going through right now is exactly what happened after from March of 2020 to like November, December, before we really started breaking out and forming new all-time highs. And so the next major move up in the market is happening right now. There's going to be some chop throughout September with the Fed interest rate meeting. So I don't know how much deeper that's going to shake out the market. I think there will be another sell-off in September, which could lead us to a negative September in terms of Bitcoin's monthly returns, or it could be a positive September depending on how quickly the markets recover. As you guys can see, August was negative 0.78, even with that bloodbath we saw where most projects saw a sell-off of like 20, 30, 40, 50% because the markets have recovered so hard within the past week to where we're pretty much clocked in like close to a zero. Negative 0.78 is virtually nothing. And there's still 6 days left in August for us to finish in the positive. Now, a big caveat here that we need to look at in terms of a market crash is where the Fed balance sheet is now compared to where we were in the past. The last time that we saw a major crash was 2007 to 2009. If you look right here on the Fed balance sheet, the balance sheet in terms of total assets in millions of dollars was only like 800,000 right here. Compared to where we are right now, we're at 7 million. So there is so much more on the Fed balance sheet that's at stake right now, and they have been tightening since 2022. So I do think that there is a level of this time will be different conversation at hand here because the balance sheet is just so much bigger, which means more liquidity sloshing around the system, even though the Fed has been tightening, is drastically more than what happened in 2007. Remember, guys, when that 2007 to 2009 crash took place, you can see to stimulate the economy, what did the Fed do? They added so much to their balance sheet and they just never really stopped from there. Sure, there were periods where they slowed down from like 2018 to 2019, similar to how they're like slowing down now, but the Fed always goes back into quantitative easing, adding more to their balance sheet, which ultimately leads for number to go up. So when we look at Bitcoin to the US dollar, before we get into the XRP to the US dollar price chart and XRP to Bitcoin's price chart, is we've been in an uptrend since November of 2022. The open interest has been in an uptrend as well too, where we've been forming higher lows. We've also been forming higher highs since the bottom of the market. And so as long as interest continuously trends up, yes, there's periods where leverage traders get liquidated, but as long as we keep trending up right here and we hold this ascending support, we form higher lows, we form higher highs. In my opinion, the market is going to continuously trend up and form new highs for Bitcoin. I do believe we're going to $100,000 before a major crash happens. And the altcoin market is about to kick off into the expansion phase as well in Q4 of this year. according to this chart right here posted by Mickey Bull Crypto, you guys can see that the RSI on the monthly candles is not over 80 right now, like we were in the past during the top. So key macro market indicators are signaling that the top is not in. If we look at others, dominance of the market cap, it's like 9.85%. We saw this markdown period in the past right before a massive expansion took place, and that was after the Bitcoin dominance dropped. And same thing with the altcoin market cap right here at like $940-950 billion, back testing the previous resistance when we were breaking out of the bear market lows as support. We did the same thing back in Q4 of 2020 before we broke out and retested the all-time high and ultimately just blew right through the all-time high. So on one side of the spectrum, we have the Fed getting ready to cut interest rates. The yield curve inversion is trending back into the positive. Virtually every single time that's happened in the past, we've seen a massive market crash. On the other side of the spectrum, we have Bitcoin mining is now legal in Russia starting today. Comparing to the past few market cycles, this is right when we're on the verge of a massive breakout. So it's like polar opposites of the yin and the yang here of what's going on based on what the Fed's doing and where we should be in this macro market cycle, leading us to a breakout towards $100,000 for Bitcoin and ultimately a rally for the rest of the altcoin market. We have China about to drop a $420 billion stimulus package, NUKE, to subsidize customers and local governments. So the money printer is about to go burr. Global liquidity injections are increasing. The US is printing $31.5 billion in September. Japan printed $8 billion in August. September is unreported yet for Japan. But when you look at this image right here, here are the US and Japanese money printing programs running currently. So just a massive amount of money in terms of liquidity support is being injected back into the markets. And if we look at the Bitcoin stock to flow model right here compared to the past, what I'll do is I'll put them up on the screen for you guys right now. That way you can see exactly what has happened after Bitcoin's halving based on this color code. So when you look on the screen right here, you can see that when we go from red to orange, we see the next major move up. Now going from orange to yellow, there is some volatility. So this would lead me to believe that when the Fed decides to cut rates, there's going to be a massive shakeout event. But I believe we're going up until that happens in the markets. Now I could be completely wrong, but that's just what my gut is telling me based on my research on the charts and the facts of the past of the matter right here. So we still have further to the upside to the go. We're not yet to the top of this market because looking at the Fed balance sheet, the Fed is going to go to quantitative easing here soon. They're not going to tighten forever because there's periods of expansion and contraction. Just like in life in general, you can connect the dots here. There's fall, winter, spring, summer. So in winter, we see massive contraction, right? So there's winter and economic climate where that's tightening, right? So in contraction, that's when you're cold. You walk outside, it's freezing, the ground is hard. And then when spring comes, there's expansion. Then summer, it's full expansion. So we're going into full summer for the crypto market. And when this market tops out, then we go into a fall and we go into a winter again. But this time the winter is going to be much bigger and much longer than most people realize. And that's why you have to be prepared. If we look at the XRP, the Bitcoin price chart compared to the XRP to the US dollar price chart, what this means for XRP is when there's expansion in the overall crypto market, XRP is usually a laggard, but it's one of the biggest performers in the later stage of this bull run. So on these vertical yellow dashed lines, you guys can see when XRP has bottomed out to Bitcoin. And then at the bottom of the screen, you can see what has happened on the XRP, the US dollar price chart. So the most recent time was, within June of 2024, sure enough, the XRP price bottomed out or down here at like 38 cents. Right now we're at 62 cents, so we're up 2x from there. And you can see XRP to Bitcoin is back into positive territory. We've had multiple weeks on this weekly chart of green candles right here trending to the upside. So in my opinion, one of two scenarios is going to take place for XRP. Scenario number one is what happened back here around lawsuit time from like December 2020 to April of 2020. And this would lead me to believe that there's another shakeout event coming in the market after we go up for a little bit, where we see XRP to Bitcoin trend up, and then we see a double bottom, and then we work our way on out of here. So this would be, my opinion, the most likely scenario, where XRP Bitcoin comes up within this range right here, and then sees a shakeout coming in September before election. This would lead XRP to break upwards of like 70, 80 cents with Bitcoin, then crash back down as the back test to this descending resistance, which would act as support. And then we work our way on out of here in the later stage of the bull run to come back up within this level in yellow on the XRP, the Bitcoin price chart. That would be most likely scenario in my opinion. Now, scenario number two is what happened all the way back here in like March of 2017 and beyond, where once we bottomed out to Bitcoin, we bottomed out on the XRP, the US dollar price chart, right at the last stage of this descending resistance right here. You guys can see we were coiling up in this symmetrical triangle on the bottom left-hand side of the screen, and we snapped from 0.005 to like $3. You know, what was it, a year later? Yeah, pretty much a year later. So in 360 something days, XRP shot up over 60,000%. So that would be another scenario. Now, how high XRP will go, I have no clue. Of course, I've given my price predictions in previous videos of anywhere between like $5 to $30 for this bull run cycle. And right now, in terms of the XRP, the Bitcoin price chart, it's looking extremely bullish. So regardless of whether scenario number 1 right here happens or scenario number 2 right here happens, either way, I think XRP is going to do very, very well this bull run. And even if we see a double bottom on the XRP, the Bitcoin price chart, you guys can see what happened right here from December of 2020 until March of 2021. XRP went from 18 cents all the way upwards of 80 cents and then came back down to like 37 cents and then bounced off of that to form a new all-time high. So a double bottom is not bad on the XRP to the Bitcoin price chart when you look at the top of the screen right here, because if we continuously trend up with Bitcoin getting closer to $70,000 and XRP breaks this descending resistance leading into September 18th FOMC meeting, the Fed cuts rates, that shakes the market out. Let's say the market drops 10, 15, 20%, maybe more, maybe less, we don't know. And September prints in a negative month like it has 8 out of the last 12 times since 2013, the majority of the time. There's a higher likelihood that we see another negative September, but there's still 6 days left in August to where a negative September could be offset by the gains you make over the next few days and leading into September 18th. So overall, I am extremely bullish for the rest of this bull run. Now leading into 2026, I'm extremely bearish. I think it's going to be one of the biggest crashes in history, ultimately leading to a parabolic blow off top for Bitcoin, leading into a drastic, nasty bear market like we've seen every single time in the past. And that's going to play in line perfectly with a meltdown for the stock market and a crash anywhere between 20 to 60%. So depending on how low we go for the stock market, how low we go for the crypto market during a bear market, that's just going to present the biggest buying opportunity of all time. So a lot of people have asked me, what is my number one way to earn massive crypto rewards this entire bull run before we get into the euphoria stage of the market cycle? Well, if you go to xrpl.to, you guys will see a lot of different altcoin projects listed on the XRP ledger, and virtually nobody knows about this, nor is anyone really paying attention to it right now because the price of XRP has been suppressed during the entire Ripple versus SEC lawsuit. But over the next few years, as Ripple and XRP gets more traction, a lot of the projects on the XRP ledger are going to gain a lot of attention. And one of my buddies showed me a project on the XRP ledger that is the first play to earn game on XRP where you're able to earn crypto rewards simply for playing the game. Now, if you guys want to see what that game is, what I'll do is I'll leave a link in the description below this video. All you have to do is click more when you scroll down and it'll show get started here. It'll take you to a page that looks like this. You simply just register, create a free account. You enter in your username, your email address, your password, and then your gender. And then you just click sign up at the bottom and it's going to take you into the back office of the members area. Now I want to explain really quick the benefit of playing this game to earn crypto rewards, because the coolest part about the game is the ticker of the altcoin is literally called crypto. It's a micro cap, very, very tiny project that virtually nobody knows about right now. And one of my buddies showed me this game and I'm already earning about 10 crypto per day, which is about 1,000 XRP. But there's no guarantee that you're going to earn 10 crypto per day or 1,000 XRP per day because your results are obviously going to vary playing the game depending at what level you come in at. So I want to be very clear that results aren't typical, and this is just purely for fun to see what happens for the rest of this bull run as the XRP ledger gains more adoption. So once you've created your free account through the link in the description below, the next thing that you're going to need is an XRP wallet. Now, the best wallet online right now is the Zaman wallet. And it's the largest and most secure XRP custodial cold storage wallet. So it's also a mobile app on your phone where you get your private keys for the wallet. It's comparable to a Ledger or a Trezor cold storage device, but the best for holding XRP. And this is what you're going to need to be able to play the game to earn crypto rewards. So again, below this video, you're going to see a tutorial video right here. And it breaks down exactly how to set up your wallet, how to be able to fund it with XRP so you can start playing the game, and everything in between. So after you've created your free community account and you have your XRP wallet, the next step is to log in to the back office of your account. And at the top, you're going to see these 4 little icons right here. You simply click this. You go to My DGP, you scroll down and then you click Purchase Combo. In the bottom left, you're going to click this little plus icon so it shows one combo pack. Click these little 3 boxes right here and then you purchase with your XRP wallet. And then all you need to do is open up your Zamin wallet on your phone. Click this little icon right here at the bottom, and then you simply scan the code on the screen. It's going to pop up. Right now, it's 5,000 XRP to get your digital game pieces to be able to play the game and earn crypto rewards. And I'm going to show you the game in a little bit and how awesome it is because the founder of this dumped millions of dollars in development into this game and has been working on it since 2020. So this is hands down the best play to earn game to earn crypto rewards on the XRP ledger. So I spent about 15,000 XRP on my digital game pieces because I want to be able to maximize the game. And so far, just recently, I'm earning 10 crypto per day, which is about 1,000 XRP per day. So you can do the math over the course of a month on what those rewards will look like. And I can swap crypto for XRP. So I'm just going to keep stacking my digital game pieces to maximize my crypto rewards. Because you also have to take into account that crypto is the in-game currency. So as more people start catching on to the XRP ledger and they start playing the game to earn rewards, then the popularity of the crypto token will increase. So obviously there's no guarantees of any profits here, but you do not want to miss out on this as more people start learning about XRP over the next few years. So all I'm going to do to get my digital game pieces is slide to accept on my XRP wallet. And it says the payment was submitted successfully. Now all I'm going to do is refresh the page. I go to my DGP assets. That simply stands for digital game pieces. And you're going to see I got one Cryptopian, a crypto land, a box, a key, a vial, and a crystal. So I'm simply just going to click claim on each of these. I'm going to open my Zamin wallet again. I'm going to click this icon right here to scan the code on the screen. And I'm just going to slide to accept. And as soon as I've claimed my digital game piece, I'm going to click reveal. And it shows me what class this is in. And one of the coolest parts about this game is each of the digital game piece reveals are random. So you could get between a level 1 to a level 10. So I'm going to click claim to reveal the land now. And then I just scan the code and slide to accept on my XRP wallet. And it just shows this little countdown thing right here as it reveals which land I have. So as you can see, that was a level 1 land. You guys might get a different level. On a previous pack, I got a level 9. And depending on the level that you get determines the crypto rewards that you earn daily. Now, after you've revealed your digital game pieces to be able to play the game to start earning crypto rewards, in the top of your back office, you click the icon right here with the 4 squares. Then you simply click the game. And then you click the button on the center of the screen that says enter the game. And then you're going to see several in-game actions here like rent, mine, thieve, govern, rule, enhance, and bank. So depending on which avatar you got will determine whether you mine, you thieve, you govern, or you rule. And then for your land, you can collect rent on your land every single day in crypto, which is awesome. So in this case, I would click on thieve, click continue. So underneath available, I simply select my Cryptopian. I select the duration in days. In this case, it'd be 1. And then I click this little icon right here. It's going to pop up this and it shows me the daily production. In this case is 0.4 crypto tokens. So depending on when you're watching this video, crypto might be at a different price. Right now it's at about $53. So all you need to do is confirm the action and it's going to say it's processed successfully. And then it's underneath active and it has a countdown timer right here in terms of time remaining until it goes back into the available section again. So you can see 23 hours and 59 minutes. Now, once this is done, my crypto balance is going to top up with an extra 0.4. Right now it's at about 44.39. And if I go back to the main page and I click on rent and click continue, you can see that I have an available land that I can collect rent on. So I simply select the land. I select the amount of days that I want it to collect rent, 1 day, 3 days, or 7 days. So this can be as passive or as active as you want, but I'm gonna click this icon right here. It's gonna pop up and it's gonna show me the daily production. And then I just confirm the action. Now you can see underneath active, I have a level 1, level 4, level 8, and a level 9. And then it shows me the time remaining on each of these land pieces that are collecting rent right now in crypto rewards, which is awesome. And so at the bottom of the screen right here, you can see crypto total net. That's about 14.96 crypto tokens. So let's just round that up to 15. And if I were to swap 15 crypto for XRP, it's about 1,554 XRP. Now that's obviously not a guarantee that you're going to earn the same amount of crypto tokens because as you can see, I have more pieces of land here because I decided to purchase more packs because I want to be able to stack up the amount of crypto tokens I earn over time throughout the rest of this entire bull run before we get into the euphoria stage. So I'm just going to continue to stack crypto tokens playing this game for fun because as more attention gets drawn over to the XRP ledger, I can see more and more users playing crypto land every single day to earn crypto rewards. So again, all you need to do right now to get started is go into the link in the description below this video, create your account. Once you have your Zamin XRP wallet and you've loaded it with XRP, following the tutorial below, then in the back office, you click the icon at the top, you click My DGP, and then you purchase your combo pack to be able to reveal your digital game pieces. So you can buy one or you can buy multiple right now because the more combo packs that you get, the more pieces of land that you're going to be able to collect rent on each and every single day. And then if you choose to get the crypto token on the secondary market, that's up to you. Or you can just play the game for fun to be able to earn crypto rewards like I'm doing right now. So once the time expires on each of these active pieces of land, I'm going to collect all of the rent in crypto, and it's going to top up my balance right here where you can see 44. So check it out. I know you guys are going to absolutely love it. And again, we're going to have a tutorial as well too on some different strategies, beginner, intermediate, and advanced, to be able to maximize this game. That way you can benefit the entire bull run as XRP explodes. So all you need to do right now is click the links below. If you go to bullrunners.com, you're also going to get early alerts on explosive altcoins, daily market analysis videos for breaking news updates like this, and you'll discover our best ways to be able to maximize the crypto land game to earn the most amount of crypto rewards this entire bull run. Because together, we believe that the spending power of the dollar is just going to keep going down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies have been going up in value over the past decade. That's the truth, and together, we're all going camping on the beaches of the moon. I'll see you guys on the next video. I will see you on bullrunners.com through the links below. As always, you know what to do. Stay bullish.